The CU 2.0 podcast. How could we build a lending tool that anybody could use? That is the driving thought that led Sherif Hassan to form FinTech Capiform, and the timing could not be better. That's because with the COVID-19 pandemic and the ensuing recession, suddenly credit unions are awash with savings deposits as investors flee equity markets. They also see a rush of loan applicants for everything from COVID-19 triggered SBA loans to equipment leases. How to efficiently handle the volume. Know that right now deposits are arriving at a much larger volume than our loans at credit unions, despite the member needs. Remember too, for the most part, mega banks have scant interest in small loans, which to them often means under $250,000. But to a credit union, that size loan is ideal. Even smaller may be better. Welcome to the CU 2.0 podcast. This is your host, Robert McGarvey. Today's guest, Sherif Hassan, is going to tell you how to efficiently make those loans. But the mega banks are shy away from those loans because they don't see how to make money on them. How could a credit union hope to? That's where Capiform's tools come in, where the borrower does much of the work. That's augmented by computer tools that verify income, check identity, etc. Much of the process is automated. According to Hassan, using his tools, a credit union could easily process 10x more loans, maybe 20x daily, without stressing staff who would engage only in higher level tasks such as verification and loan approval. Adds Capiform on its website. Capiform's lending as a platform empowers you to scale your lending portfolio immediately, configure underwriting instantly, and deploy new compliance and product guidelines. Sounds good? You bet. And the timing is so right. In this podcast, you will hear about how Capiform tools were developed, what they do, and the real benefits they could bring your credit union, and also bring your members who really do need to borrow this money in many cases for their small businesses, etc., etc. The money's there. It can be lent. It can be lent profitably by the credit union and to the great benefit of the members. Listen up.
So let's start out. Tell me what you see. What problem are you going to solve? Credit unions have a problem. Biggest problem they have right now is a lot of people want loans, but how the heck do we process this?
Right. I think, I'll go back a bit to why we started building this. And it was really to tackle the express loan and the 7A loan. And it seemed like there were so many lenders that were eligible to provide these, but then we looked at the rosters and there were so few of them actually doing the work or offering the loans. A lot of it had to do with their own human capacity. They just didn't have enough folks that were trained to do it, or they just didn't have a big enough staff to do it. And as we went ahead and we started looking at it, especially for the express loan, the paperwork requirements weren't so heavy, the underwriting requirements weren't so heavy. Coming from small business lending, we knew that it was something that was pretty easy to solve. Spent some time looking for a good software provider, like a good platform to build this on. And we were lucky. I ended up spending maybe 2 weeks up in Boston with a software company that I'd kind of filtered down to. And while I was up there, I met with a credit union, probably about 500 million in assets. And they gave me their full kind of due diligence or their auditing requirements for who they could work with, third parties and software developers. And so we spent that whole summer, kind of solving that audit problem. Like, could we use this software on Amazon Web Services with me and my crew doing the development, and would it pass? And we ended up putting together, I want to say maybe like a 200 or 250 page document that went from everything from encryption to uptime to Sarbanes-Oxley compliance, and put together a really neat document, passed the muster. So we said, let's go ahead and build this. Our first kind of, let's show the world this work, it's maybe towards the end of January, and started getting some really good feedback. We need to add this, we need to fix this. And before we knew it, the whole world had changed. So where this digital transformation was just kind of this lofty goal of, credit unions should be getting to this, to, oh my God, the house is on fire. How do credit unions hurry up and get up and running? Branches were closed. Clients needed to apply for this PPP program. What could we do to help? And but now that we're seeing some of the back-end problems that are coming up, especially with whether or not these loans are going to be forgiven, what the forgiveness process might look like. We're finding that our product is super timely right now, and putting together the right, maybe the right strategy for how to best help small business lenders, and of course the credit unions that have provided these loans to them.
And reports I saw yesterday say that contrary to what many people think, including many people in financial services, there still is SBA money to lend.
I heard something like a 90% drop in applications over the last 2 weeks.
Well, and I think it's because people believe that all the money's been taken, why bother? But what I saw is there's still hundreds of millions of dollars left over.
You're exactly right. I think the earmarked was 510 billion out of an available 650 billion. So there is quite a bit of it left. I think it's been the news though. I think people are afraid to take them. You know, you hear of some of the larger companies, you know, being forced to give this money back, and some of the publicly traded or folks who have access to capital from other sources. And, you know, I guess last week was the first, you know, real fraud suit against a company somewhere in the Northeast. You know, Robert, I think one of the big problems is the SBA, so you know, like, they're so cool how they were able to get this money out so fast. I don't know if they thought it through exactly right. You know, the idea was, let's get the plane up in the air, and then we're like, oh, now we kind of have to fix or, you know, finish building the plane. It's kind of strange. And now each couple of weeks or each couple of days there are new notices about some different changes, and putting that money out quick and setting that deadline for how they had to spend it and how quickly they had to spend it and on what they could spend it. Restaurants aren't open. A lot of retailers aren't open. How can you spend that money in 8 or 10 weeks when everyone is already home? And then you read stories about folks who'd gotten the money and called their employees to come back to work, and they were doing better on unemployment, and they were feeling safer at home on unemployment. Kind of difficult to get those folks to get back to work, putting small business owners kind of in a jam of, you know, do you pay people who are staying at home? Do you try to hire them and force them to come back? Just wasn't exactly thought out right. And it wasn't like a haste makes waste kind of thing, but more like using the SBA and then using the small businesses themselves to kind of almost serve as an unemployment office. Keep your folks at home or keep paying them, keep them on the payroll. And as well intended as it was, I just don't know if it was as well thought out as it should have been.
And just this morning, Dr. Fauci, probably the most trusted person in America regarding coronavirus, said in testimony before the Senate that opening too fast would be a big mistake, that many people would die unnecessarily. He was emphatic about that. Restaurant owner, what do you do? Even if your governor is saying open, Dr. Fauci is saying you might kill people. Huh.
Oh, yikes.
So how is your company? How are you going to help solve some of these problems?
So I think, you know, we're lucky enough to still be at a point where we're agile to kind of pivot based on what opportunities we see, where we feel we can help the most. I think we're going to have a big impact on this whole forgiveness part. If I had to guess, and it really is just a guess right now, I imagine, let's assume there are two camps. There are the SBA lenders who have been SBA lenders, and then there are the kind of like the conditional ones, folks who got approved who were not SBA lenders, but got approved just for this program, just to kind of increase the bandwidth. For the folks that are currently or have been SBA providers, I imagine that, so let's take this one step back. So folks are either going to have these loans forgiven if they can satisfy all the conditions, or they'll have a portion of it forgiven, or they won't have any of it forgiven. The folks who will have this forgiven and have it turned into grants, those folks should be just fine. The other two sets of companies, partly forgiven, not forgiven, you know, although this is a low interest loan, I think it's as low as 1% interest rate, which is practically free. The problem is the payback term. They capped it at 2 years. It's just going to be a super heavy monthly burden. Like, you know, that $100,000 company is paying back $4,000 or $5,000 a month, in addition to trying to ramp up their business, in addition to all their other expenses. It's going to be a pretty heavy burden. I imagine, and hopefully cooler heads will prevail, the idea might be, how do you turn this into a 7A or an Express, and then expand the terms to the normal, average 7 years? If they're able to do that, I think they'll give small businesses enough runway to figure out, okay, how do we get back to normal, and how do we start to grow our business? How do we service this debt? Big problem though is one of the bases or one of the core documents for both of those loan programs, well, especially the 7A, let's focus there. Part of your submitting documents is a business plan. So the idea is, who are you? What do you do? How do you project your business is going to grow over that 7-year period? Usually these business plans are for 3 or 5 years. And so that's a critical piece that's missing here. Because the PPP program was really about speed and about verification, there was really no underwriting, and the due diligence that was part of this program was to make sure, is this the right company, and is this the right owner, and is this really their payroll? But without really looking forward to, is this a viable small business? So I think that's going to be a big part of it. As they're doing these conversions, they're going to have to look at, are these companies worth saving? I read something like 40 or 50% of all of these small businesses might not make it over the next 6 months. And so the idea of giving these folks additional money or extending out the terms might not be the exact right way to do it.
And if they are in business, they might look very different. You hear that from restaurateurs a lot, that they might be in business, but they're not going to be a fine dining place anymore. They're going to be a takeout place or whatever.
Right, so they're going to look different, that's for sure. How do we think we can help? A couple of ways. So again, this whole work from home kind of mentality, that may last some time. Sizing down might last for some time. We can really help in those two aspects. We've been really good at figuring out, how do we get technology to do the majority of the heavy lifting? So we look at all the items or all the metrics or all the data that's really needed to underwrite these loans, not this PPP program, mind you, but the traditional SBA products. And we were able to pull every single piece of data, bar the business plan. So personal credit and business credit and personal and business background and transaction data and macroeconomic data. We're able to get all of that information online now, able to build out the right APIs, able to build that full data stack that these small business lenders need to underwrite these deals. So instead of it being 2 or 3 or 4 bodies to get a deal done, it really is just that single body and kind of like a higher level person who's just doing the verification of that information. So we feel like from an efficiency and how many loan applications can a credit union actually look at, we feel like by using a product like ours, they can maybe do 10 or even 20 times as many as they're currently used to doing.
No, wow. And you showed me your products the other day, and I'd say that they look to me to be about as easy to fill out as an Excel spreadsheet, maybe even easier because you're prompted at every step. You don't need to be a technologist to do this.
Nice. The prompting part, we spent a lot of time working on this, and almost like some game theory and how do we move the customer forward. If you remember doing that demo, imagine if I were the customer. I'm doing almost all of the work myself. There really is no bank officer involved in the deal. Even after, even past the date, like the document upload at the end, that's when somebody gets involved, like 90% of the way through. So imagine that one person might spend a half an hour, maybe an hour on the deal, and just one person, as opposed to 3 or 4 people, each spending 4 or 5 hours on the deal. So now we're looking at, I guess there was like 40 or 45 million of these deals put out there. There's going to be, I guess, a couple of steps still, just for the forgiveness part. I guess it's just going to be a verification of where did this money go. So we look at some of the technology that's out there. It could be from bank transaction data. It could be from one of the payroll service providers. They're really keen now on getting their data out there and making it available. If I could see, an ADP roll just for the last 8 weeks, super easy for us to determine was 75% of that money really used for payroll. And unless that changes, which it very well may change, the rules seem to be changing, regardless of what the rules are, those are pretty easy rules to write for us. You know, if they bring it down to 50%, we can do that check or whatever that number is. I think also the important part going forward is we really need to see whether or not these customers have a plan. So I'd much rather a senior person at a bank, instead of having to go through all the mundane parts of this, of collecting the data and analyzing and seeing whether or not they hit these criteria, let them sit and analyze whether or not this is a viable business and what can the bank do to help. And it might be that a small business got, again, let's use that $100,000 number. For them to kind of really get up and running, they might need another $100,000. But do you want to throw good money after bad money? Well, you probably don't. But the idea is if you're analyzing their business plan, seeing what their turnaround strategy or their growth strategy is, and instead of it being a $100,000 loan that needs to be repaid in 2 years, that might be impossible. But a $200,000 loan that's repayable over 7 or 8 or 10 years might be a much better bet for the bank. So we want the folks in the bank to be doing the hard, like the more intense work, like the real analysis work, not just the verification stuff.
Well, your process takes a lot of the work out of it. I think one issue with $100,000 loan, which one of the top 5 banks in America generally doesn't want to make anyway, because they view it as too much work for too little money. Come in when you can borrow 10 million. We'll talk.
That's exactly right.
And so how do you make it so that it's profitable for an institution to do a $100,000 loan? I think by automating a lot of the process, it becomes potentially profitable. And as you say, the applicant does most of the work to begin with anyway.
You saw even the negotiation screen of saying you're eligible for 200K. We'll let the borrower say, you know what, I only need 75K, or I want to try to make it for the longest term. We really put it in the hands of the small business owner, which is great for the business owner himself. He has that ownership feeling of the deal. And then again, on the credit union side or on the bank side, also great for them. They're not getting involved in the deal until they know that the customer is credit qualified and cash flow qualified, interested in taking the deal. And you saw, we even let the customer sign that contract before it even gets sent to the bank to do their analysis part. You know, a big problem in small business lending is something like, it's called a look to book ratio. How many applications do you have to look at in order to close a single deal? And when you think about our process here, the look to book ratio might be 100%. Like, it's not getting to the banker until the deal's been approved and docked. It's quite different.
And the applicant will not feel, as they often feel, that they were talked into taking more money than they want. To pick how much you want before the banker even sees it. You've specified your loan size.
Right. And you saw how neat it was. As you're changing the dollar amount in the term, the monthly payment is adjusting in real time there. So the idea is you could kind of fix it up saying, you know, I only want to spend $500 a month on this loan. You could work out the numbers that you have a $500 payment. No one is pushing you to get to the max because they either make a commission or they want to put out the most dollars that they can. Really there's no pressure on the customer. Like from a user experience perspective, it's just perfect.
So what's exciting to me about the software you're developing is it goes way beyond just SBA PPP. Yeah, I could see it used for equipment loans, for instance.
Nice.
Pretty straightforward. And again, this is, Chase is not going to lend you $100,000 to buy a new tractor. They don't want to do that business. Whereas for the right credit union in a farm state, that's beautiful business.
Yeah,
you can make those loans all day long if you can do it affordably and intelligently. Software that automates it makes all that possible, I think.
You make such a strong point there, Robert. Think of it, any kind of financial product, the front end is collecting as much information as you can. And then the back end is getting the contract out and funding the loan and then collecting the monthly payments. The only part that's different based on the product is really the decision engine and the pricing engine. So again, when you think about the credit policy for a small business loan, or like you said, the credit policy for an equipment lease, or even a mortgage or a student loan. So that's the only piece that's different in our platform. based on the product that's being underwritten. As we continue to develop the software, we're thinking about, do we go upstream? Do we go to, how do we integrate different products? And it'll all be a lot based on what our clients are asking for. Instead of having to build out a whole new system or hard coding for a specific product, we've built this pretty, I guess, with modules, I guess is the right way to say it. And all we'd be replacing, or even just adding, for each new product line that we'd be adding, would just be that decision engine and pricing engine. So a customer might come in, enter that same information that we're asking for, and there might be an additional page, what is your intended use of the funds? I need a little bit for cash flow, and I need a little bit to pay some existing debt that I have, and it would be great to do some renovations or buy a piece of equipment. And then as the approvals come up, based on some of those questions, they might have a host of products available to them. Here, take 25 in cash to do this, take this lease to do this, pay down your student loan with this. And because it really is all the same data, but each of the calculations might be weighing each of those data pieces a little bit differently.
Now, from the institution's point of view, the credit union's point of view, it does not need significant technological skill to implement this, right? Did I understand that?
That's exactly right. We've been really lucky. The credit union, community has been so helpful to us and telling us about the core services that they use and some of the obstacles that are in front of them, and because of their either client or geographic restrictions, how difficult it's been for them to make these big investments. And although they know they've got to move forward and they've got to digitize their businesses, they're all just kind of paralyzed because it is a kind of a big project to take on, and it's quite expensive, and they might not have the technological kind of resources in-house to do it. And so our whole kind of thesis here was, how do we build something that almost anyone could use? And then the idea is, there isn't really even a customization stage. It's almost like just a configuration stage. Like, do you remember after we took that client through the process, we showed you some of the back end of the software and how easy it was to configure the credit scorecard.
Right.
Right. So that's really the cool part here, is that a head of risk would come and work with us for a day or two, show us the credit policy. We'd help them to weigh to make the right weights on the right metrics, and then we'd run some of their old data through. And then the idea is just to fine tune. And then you saw it, just upload your logo, tell us your primary and your secondary colors, they're ready to go. And then the idea of how do we integrate that data with their current core service or any of their other back office data, it's just a matter of creating the right endpoints. What data do you need us to feed into your own system? It's all really pretty simple.
And it can be customized to the institution, and the institution can change its mind. It's, we want to tighten the standards for giving loans. We're getting nervous, or we want to loosen it up because we want to lend more money, because a lot of institutions are reporting that they're seeing a flood of savings, I guess, as people take money out of the stock market.
Right.
And savings accounts are not good news for a credit union unless they can make that money work.
And those 30-year mortgages at 2 or 2.5% also do not make very much money.
So the real estate market right now is, I'm not predicting a crash in real estate, but no one knows what's going to happen in real estate.
You can predict it, Robert. I won't hold you to it. As not even just small business owners, but business owners have a hard time making their rent payments. I think the commercial real estate industry is going to have some volatility over the next period.
Oh, absolutely. And it can get worse. There's a pretty famous New York restaurant owner, David Chang, who has a podcast, a great podcast. He curses a lot. So if you're not into cursing, you're not going to listen to Chang. But what Chang is saying is that every restaurant owner just has to call their landlord and say, you need to reduce the rent. You need to reduce it by about 50%, because we're going to be making 50% less if we have social distancing. It's real simple. You want us to stay here, cut the rent in half.
Right.
Okay, I understand from the restaurant owner's point of view, but from the real estate owner's point of view, we're talking massive pain.
Right.
So,
And it's funny, the waterfall there, like from the restaurant owner to the landlord to his bank, then the bank to their, securitization, like it's not like a waterfall downstream, but it really affects all levels up to where the dollar is. There's just going to have to be some restructuring. People are just going to have to face reality. And I think the sooner they do it, the better.
It's going to be very painful. But I do agree with your basic premise that institutions need to adopt a whole lot more technology. You can't put on your eye shade and take out your pencil and your online sheet of paper and start calculating loans.
No, for sure not. And I'll tell you, for the few years that we've been investigating and building this, everyone seems to know this. It's just now there's such an urgency. Like we used to have to beg people, hey, listen to what we're talking about and let us show you what we're doing. And okay, when I get around to it, I'll find you 15 or 30 minutes. To now people saying, oh, Sherif, I remember you had something cool. Is it ready? Can you show it to us? And it's just so different. Like I live in a pretty small town, maybe 50,000 people. And our whole main street, there must be a dozen community banks here. They're all closed. The only banks that are open are Chase and Bank of America. And there's no way they want to be closed. They just can't, there's just nobody in there. If they had this kind of technology and they could reach out to their customers, that's another thing. All you need is a web browser to do business on this platform. Don't have to be there. There's no paper. There's no printing and scanning and faxing, it's just a thing of the past now. And with the social distancing, no more face-to-face interaction. Just do it online. And it seems to me from everything that we read, that's really what customers want anyway.
So and I did see statistics just this morning about the flood of money into savings accounts and credit unions. And on the one hand, that sounds wonderful. On the other hand, I know from the credit union perspective, that money has to be put out to work. And that means loans. And as you say, I don't really see a big rush to do mortgage loans right now. If anything, I see mortgage standards tightening up a fair amount. And car loans, it's really hard to move cars. So what's left? It's these kinds of, for a credit union, non-traditional loan products. And maybe you've never done one of these loans before, but just use the software, man, and guide you through
it. And knowing that, especially on the express loan, I think the express loan is up to 100K or something. The idea that the government is backing such a big portion of it, not to encourage them to take chances, but encourage them to open new markets. Like usually at the end of any kind of downturn, there are lots of opportunities for the folks who are open to new things and thinking about new ideas or wanted to start a new business. This is really a good time for it. And when you think about it, businesses are going to change. Like you said, even restaurants who've been restaurants for so many years, they're changing. Like they just have to. And could it be that the next kind of restaurant, especially here in the city, nobody cooks? The idea could be open up just a huge kitchen. And the idea is every person that's on their way home from work, just make your order online on your way home, just pick it up and go home, and just different, like industrial kitchens as opposed to, fine dining.
So if a credit union is interested, what's their next step with you? What do you want them to do?
I want them to get in touch with us, of course. There's a couple of things that we haven't touched on, and it's funny, do you mind if I bring up just one or two more topics?
Oh, sure, please.
All right, cool, I appreciate it. Anytime there's a big technological change or a company is thinking about making some kind of change, there's always this, build versus buy conversation. Do we do it ourselves? Do we bring engineers in-house? And how much time will it take? And how much will it cost us? And we're going to make sure that we are always efficient enough at adding new modules and inexpensive enough to not even have to worry about that kind of build versus buy. Like, because we're building for such a wide audience, our ability to scale is always going to be so different from an individual institution trying to do this. And even from a brain power capacity, everything we do is going to be based on all of our customers saying, this is what we need and this needs to change, or could you add this? And we have this really kind of flat architecture where we're hoping that every time we add a new module, all of our customers get it. And every time there's an improvement, and we look now, we're in the middle of building out our own CRM. For folks who are not using a CRM, obviously it's going to be a huge gain for them. But then there are folks who are using a CRM system that might be costing them $100 or $120 per user per month. And that in and of itself, and of course the engineering that's involved with that and the customization that's involved with that, we could almost start making cases that, by using us, you're actually saving a ton of money because you're not using 2 or 3 other services that you might have been using.
What I say to Salesforce users is, if you wonder if you're paying a lot for Salesforce, just take a trip to San Francisco. I did a few months ago, and look at the Salesforce real estate. That's all I want you to do. Just look at these. They have a new skyscraper that's it's the tallest. I think it's the tallest building in San Francisco.
I wasn't going to call anyone out by name. Okay.
I think Salesforce, it's a wonderful CRM product. All I'm asking is, are you paying what you think you should pay? That's all I'm asking.
Right.
With credit unions, generally, I don't think build versus buy is the issue for them. It's buy versus let's ignore this and hope we don't have to deal with it.
Well, to all your listeners, Robert, you can no longer ignore this one.
Oh, I think this is and also, as you suggested, this is a time of new opportunity.
Yeah. And the folks who get on board, I think, are going to have a very, very bright future.
And the Chases and the Wells Fargos, they don't want this, which means that basically this is a fight amongst credit unions and community banks, where the odds are pretty even. It's just
that's exactly right.
Do you want to fight? Do I think an average credit union can beat Chase on a lot of things? No, I don't. Chase is really good at what they do. They have bulk buying power, et cetera, et cetera. Can you beat a community bank? You sure can. Just try.
And like you said, do you remember that last conversation we had about folks from Chase telling you, we are a technology company, we just happen to have money as our end product, right.
Yes.
Yeah, it's true. Like it's totally true. And I've seen them like we've built for them in my past work. We've built for them and they figured out our work and they were like, okay, thanks, but no thanks. We're going to do it ourselves. And they've come out with beautiful products.
Oh, when Chase decides it wants something, it goes out. I know for a fact, I've talked with them. They go out and they hire like 30 smart people, kids from Carnegie Mellon. They don't hire 1 or 2. So anything else, Sherif?
One other thing, when we look at some of the folks that came in to help in this PPP program, and a lot of their focus was on the front end. How do we build this digital application? I want folks who look at these solutions to try to look past that. It isn't just, do you have a digital application? You could whip one of those up in just a couple of weeks, even if that long. That's why we made a point of showing you how deep our work was and how we were storing our data and how we were scoring our customers. Just make sure that when you're analyzing a service provider or a technology partner, that the work is built to last. And we've actually taken it much slower than the folks who are involved with us have been saying, oh, get to market. We took our time and we're really thoughtful about what we decided to build and the architecture we used to build it to make sure that it was scalable and that we were able to continue to add to it. We're super pleased with where we are right now.
Before we go, think hard about how you can help support this podcast so we can do more interviews with more thoughtful leaders in the credit union world. What we're trying to figure out here in these podcasts is what's next for credit unions. What can they do to really, really, really make a difference in the financial scene? Can't all be mega banks, can it? It's my hope it won't all be mega banks. It'll always be a place for credit unions. That's what we're discussing here. So figure out how you can help. Get in touch with me. This is rjmcgarvey@gmail.com. Robert McGarvey, again, that's rjmcgarvey@gmail.com. Get in touch. We'll figure out a way that you can help. We need your support. We want your support. We thank you for your support. The CU 2.0 podcast.